So we're joined from Nashville, Tennessee. Even though she doesn't live there, she's visiting by my friend, my high school classmate, owner of MS Lending, Michelle Dugan. We thank you so much for taking some time for us to talk about this very important topic for our personal finance class. We're recording this for all of our friends in Madison County schools, including my friend Coach Robin Mercer over at our alma mater, Madison Central, Ridgeland High School, Germantown High School, the Academic Option Center, and our YouTube channel. So thank you for taking some time for us today.
Awesome. Thanks for having me. I always love joining y'all and getting to catch up with you and then your class and answer some
Yeah.
questions and stuff for y'all.
Yeah, and with the exception of one young man, I've got all females in here with me today. So you're
Wow.
the next in a series of unbelievable women that we're showing these young ladies.
I
Um,
love that.
but obviously, we want to talk about what all goes into mortgage lending and why it's so important to be prepared for it and understanding it. But just give us a little background because you did not want to do this when you graduated from high school. Your original plan was to be an attorney.
That is correct. So I actually did not have any idea. I knew a little bit about mortgages and real estate because I had grown up around some of it with my mom and what she did, and thought that I wanted to be a real estate attorney. I didn't really know exactly what they did, but I thought that's what I wanted to do, was headed to school to do that. And then while I was on my way, I was working as a paralegal for a real estate attorney and met a mortgage broker. I was sending him a lot of referrals, and he convinced me to get my license. And before I even started law school, I got accepted, and then decided to defer for a year. Spent some time in the mortgage industry. Had my first son, who just graduated from Madison Central last year, and fell in love with the industry and decided, you know what, law school will always be there, but if I ever stop loving mortgages, then I can go back. But it definitely was my calling, and it has become my absolute passion. So sometimes
Yeah.
plan B and the path that you don't know that you're going to take ends up being the right one in the end.
Oh, if anybody knows that, it's me. Now, one thing I do want to talk about because I was talking about this with them before you came on. You grew up with in the house with a mortgage person. I grew up in the house with a realtor. I know you've worked with my mom a few times, but
Yep.
even though that was the case, this is not something that we were taught.
No.
We went to Madison Central, all so many great things about the school. But at that time, the district had not really understood how important this was. So I don't think these
Right.
kids understand that this is not something that we got, and it's so important to understand that. And I wish we would have gotten more on it. Now that's not to reflect bad on the school, but it was just not
Yeah.
something that was really on the radar at that time. So
Right.
this is something that that you have to learn. Um,
Exactly.
so because I have a couple, and we were talking about, they all the people in here with me, they said at some point in their life they want to own a home.
Yeah.
So,
Awesome.
on the process of that, they all, we all see the realtors and we see, that they're all these wannabe influencers that are realtors, and some of them do a great job. But before
Yep.
you ever even think about talking to a realtor, you've got to talk to a lender. So take us
That's
through
right.
that process because that is so vital to ever deciding what you can afford and how it's going to look.
Exactly. So what normally happens is a lot of people will fall in love with a house, and then they try to figure out a plan for how to get the house later. And they'll normally call their real estate agent or their realtor that they're working with, or that may have their name on the sign in a yard. And the first thing that realtor is going to do is say, "Hey, you need to go get pre-approved." So, of course, us being in the mortgage industry, we try to reach as many people as we can before they start that process, just so that we can go ahead and get them ready and make sure that they are, in fact, ready to buy a home. We have some people that we work with for years before they're actually able to buy a home. We have some people that we only work with for a week or two because, they're just more established and later on in life. One of the things I always say is it's never too soon to start looking into getting pre-approved to buy a home. It doesn't matter if you are 18, 28, 48, if you've never owned a home and you don't know anything about it, it's never too early to get started. And there's just so much that goes into it that, there's a lot of terms and terminology that you've never heard of that you want to get familiar with. There's different pay, like everybody gets paid in different ways. So how you qualify could be different. You may need to plan for it for a little bit longer. There's all sorts of programs to help you purchase. Some where you don't have to have any kind of down payment. Some do require a down payment, just depending on which way you're going. And so the sooner that you can start planning for that, the better off that you're going to be in the long run, and the more comfortable that you're going to be once you get to, falling in love with the home and ready to take on a mortgage and things like that. So it's never too soon to get started. But yes, we love when we get to start with the clients first, but typically that's the way that it's gonna go, because either you're gonna come to the mortgage person first, or you're gonna call your realtor and they're gonna send you right back to the mortgage person. So
At some point, it's going to happen unless you've got about $250,000 in cash sitting around.
that's exactly
Now,
right.
when it comes to determining the mortgage rate, and
Yeah,
again, they had some questions. I'm not expecting high school kids to know all the terminology, and
sure.
that's perfectly fine. So I don't want
Yeah,
anybody to think they're stupid or anything, because these are
no.
good questions.
Yeah,
Because when it comes to getting the mortgage, a
yep.
lot of credit history is involved.
Hmm.
So start paying attention to that as soon as you turn 18, or even before you turn 18,
That
because
is absolutely
you're going to
correct.
determine that rate based on the credit history, and you're going to want to see pay stubs. You're going to want to see banking history. A Cash App card is not banking history,
No,
so it's very
nope.
important to go ahead and start getting a relationship with a bank as soon as possible.
That's right. That's right. And I will say we do have some clients every now and then that, don't have super long banking histories and stuff. There's still a lot of people in Mississippi that don't want to have to put their money into a bank. However, when you're going to buy a home and you say, "Oh, I've got $10,000 sitting in a safe at my home," we can't use that for a mortgage. So
Yeah.
we've always got to make sure that it's in a bank, or that it's coming from a source that we're able to use. And just cash sitting on hand doesn't work for that, unfortunately. But just like you mentioned with like pay stubs, depending on if you're self-employed, we may need tax returns. We're typically going to need at least 2 years of that. So there's so much that goes into it. I will say, there are programs now to where you actually can qualify to buy a house if you don't have any credit history. But when I say no credit history, you also can't have any negative credit history. So from the time that you turn 18, anything that you legally owe to someone else for anything, they can put it on your credit report if you don't pay it on time. So if you think, "Oh, I'm 18, I'm independent now, I'm going to run out and get a cell phone in my own name." Well, if you turn that cell phone off one day and you don't pay that final bill, they're going to put on your credit. And so there can just be little things that hit you even when you're young that you don't know about. One of the things we used to see a lot from younger people that were just getting started with credit was medical bills and medical collections. And a lot of it was just simply because they didn't know that their parents weren't responsible for it anymore. Or maybe they had moved off to college. And so the bills from the doctor were going to either a college address and their parents didn't know about it. There's always a lot of different reasons why people would miss things, but thankfully medical is not reported in the same way anymore. So we don't see as much of that. But we've got programs, if you don't have credit established, but unfortunately, you're going to have a lot better interest rates if you do have credit. So, and I say unfortunately only because it's one of those where it kind of takes credit to get credit, but you got to get started somewhere. And what a lot of people usually do with that is get like secured credit cards, or they'll go to a local bank, take out a simple loan that they can pay back over time. And, I normally don't advise anybody to go and buy a car as one of the ways that they can build credit, because yes, it will help you build credit. However, we see some people whose car payments are so massive that they are not able to buy the home that they want. So,
There you go.
like I always tell them, unless you're going to be able to live in the car, let's try to make sure that that car payment's not going to exceed what your house payment should be, so that it doesn't hold you back. But there's a lot of different ways that you can build credit now, which is really nice. But yeah, as soon as you turn 18, even honestly before, there's people who have parents that add them to accounts of theirs, so it'll start reporting to credit. But it's once you're 18, it's really good to be aware of it. You can check your credit report for free twice a year on annualcreditreport.com. And that'll just let you know what's out there. If there's anything being reported, if there's anything negative, if there's anything that's incorrect, The one downside to credit is that no one's going to come along and tell you if there's something wrong on your credit other than you actually catching it and noticing it yourself. Every now and then a company will see that they've done something wrong and they'll get it corrected, but it's really important to, to monitor it. And you have those two reports a year that you can get for free that are going to show you everything. So that's always a good idea once you've turned 18.
Yeah, and the thing is too is just because you're making a lot of money doesn't mean you have great credit.
That's
Because you
right.
hear all the time about you see people in real estate say, yeah, I had this doctor that was making over $1 million a year, but they couldn't get approved for the mortgage. So just
Yep.
because you're making a lot of money doesn't mean that you necessarily are gonna get a good credit rate. So I'm sure you've seen that on several occasions. So what
Absolutely.
are some mistakes that you're seeing people making when they go to college? And we've talked about this in this class. When you get to college, I don't see how it's legal that these credit card companies are just preying on these kids.
They
Like
are.
they're just
Yep.
set up and they give you a free gift and they give you this card and you don't even know how it works. And
That's
that has
right.
ruined people's credit because they
Yeah.
didn't know. So what are some things you've seen that young people aren't knowing about and they're making mistakes before they get to the point where they want to buy the house?
Hold on one second. I have a daughter singing upstairs. One second. Okay, sorry about that. We've got a little songbird in our house, so she loves to sing. But so some of the things that we see, like mistake wise, is honestly like just taking out too much, being over leveraged, which basically means that just because someone gives you a credit card doesn't mean that you should take the credit card every single time. Now, I understand getting established just to be able to have something in your name, but sometimes we'll see people come in and they've just got all these credit cards and all this stuff that they, and all these high balances, and those really impact your credit. It's like 30% of your credit score comes from your revolving debt that you have. So even if you only have a $500 credit card, but you have it maxed out every month and it's at $499 or 500 or even higher when they report it, that's going to be treated just the same as if you had $100,000 in credit card debt that was maxed out at $100,000. So just because you have a credit card, it's there, use it. You want it to report to credit, but you don't want to keep it maxed out because that's not the point of having it. And it's only going to hurt your scores in the end. Another thing that we see a lot from young people is that they'll take out student loans. Which is totally fine. There has been a lot of reform over the last year with that. So you can't take out nearly as much as you used to be able to. So getting good grades, applying for every scholarship and program that you can is super important. But a lot of times these people will take out loans, they'll get through college, and then once they get out of college, the payments will be deferred for a certain period of time. They'll come out of deferment and they will have moved away, or they're not using the same email address, or maybe their phone number has changed, and they just don't realize that the student loans have started repay, like the repayment on them has begun again, and they'll start to get a lot of negative history from that. Thankfully, there is a really good program where you can go in and you can catch it up and you can pay on it and they'll remove all the lates and stuff because it does happen a lot. But that's one of the big things too, is if you take the money out, just know that you do actually have to repay it at some point. And they do give you all this information, but I don't feel like they necessarily always do a great job of being super transparent about it. And then just like I said, there's so many life changes that happen between the end of college and then getting started in life and moving around. It's always good to be cognizant of when those, bills are going to start coming due, because that's one of the biggest things that we see out of young people is just that they didn't realize that their student loans had started repayment. Um, and especially over the last 2 years with COVID, it's been kind of a mess actually, but it's starting to get caught up in a little bit better now. So,
Now, one thing you talk about on your website is looking at homeowners insurance. And
yep.
I think that is something that is extremely overlooked. And I think social media has kind of caused a problem on this because we see people say, I got this house for X amount of dollars. And then you're like, how in the world is something that cheap? But
Yeah.
then you see later that it's because tons of repairs needed to be made. This person didn't do a home inspection. And I'm far from an expert like you are, but, simple things like if you get a mortgage and you buy a home without a home inspection, you are absolutely outside of your mind
Yes.
because
Absolutely.
you are setting yourself up for financial ruin because
Yep.
you didn't have it inspected on the front end. Then you sign the dotted line. There's nothing you can do about it. So
That's right.
homeowners insurance is something that needs to be factored in when you're looking at being able to afford something. Because I
Yep.
always joke about, we all watched Good Times, and the dad was the super in the high rise, and you could call him to get something fixed if you lived in the high rise. But when you live in the house, you are the maintenance man.
That's
So
right.
and if you can't fix it, you got to pay somebody to do it. So that is a
Yep.
cost that I think a lot of people overlook
Yep.
because I love, and again, I think social media has a negative impact on this. They say the bank told me that I couldn't afford the $500 a month mortgage, but instead I'm paying $900 a month in rent. And I'm like, well, if you look at paying for the homeowner's insurance, then for any repairs, you're probably paying about the same amount in a lot of
Yeah.
cases. So
Yeah.
talk about that because I'm glad you have that on your website because I think a lot of, especially a lot of young people, they want to buy the home, but they don't even think about the insurance cost.
Yeah, there's a lot. So there's actually several different parts of the mortgage. So you've got your principal and interest, which is the loan plus the interest that you're paying back. You're going to pay homeowners insurance every single year. Most people opt to pay that as a part of their mortgage payment so that they're not paying a super large bill. At some point during the year, they can break it up. And then you're also going to pay property taxes for the property. There's going to be homeowner association dues, depending on where you live. If you're out in the country, then you may not have that. If you're in a neighborhood, most of them do. And then, depending on the loan program that you do, most of them, if you're not putting down at least 20%, are going to have mortgage insurance. The only exception to that is if you have a certain type of mortgage insurance where it's paid up front, or if you're doing like a VA loan and you're a disabled veteran, they don't have to pay, or not even a disabled veteran, any veteran they don't have to pay mortgage insurance on their loans. But there's a lot of different parts that go into the mortgage. So that's one of the things that we look at when we're doing the planning on the front end is we're not going to look at just the mortgage cost for the payment for the principal and interest. We're going to let you know what the taxes are estimated to be, what the mortgage insurance, what homeowners insurance, HOA dues. We want you to see the whole picture of that. So, like with the homeowners insurance, it has become it's gotten a little tricky over the last several years. Every time we've had a lot of hailstorms, tornadoes,
Oh,
hurricanes
yeah.
that come through, and you see all these people getting new roofs all around town. Well, there's a lot of people that like to say, oh, like insurance covers it and you don't have to pay for anything. But insurance, eventually they will recoup their cost. And that typically comes in the form of higher insurance premiums. And unfortunately, it's not just the people that got a new roof, it's kind of across the board. So we've been seeing some really big increases in homeowners insurance, actually. Um, and one of the things that you mentioned though, so homeowners insurance, you always have to have it whenever you have a mortgage because they want to know that in the event that something happened and like the house burnt down, that they're going to be able to get their money back that they gave you for that. Now, if let's say that you have a $200,000 house and there's a $150,000 mortgage against it, if something happened and a tornado wiped it away, or if there was a fire or anything that destroyed the home, they're going to first pay off the loan that you have. So they would pay off the 150,000 and then they would pay you for whatever the other, portions of the policy are. If you had it insured for $200,000 and then you also had personal belongings that were insured, you may end up getting additional money back. You can always rebuild the home. I mean, there's a lot that goes into it, but insurance is definitely a big part of it. And you always want to make sure, even if you pay cash for a home, you still want to make sure that you have insurance on it because it's such a large asset and they can just be so easily wiped away, unfortunately, with, due to disasters and, things that happen. Um, but one of the things that you mentioned was talking about paying rent versus paying a mortgage. And a lot of people typically they're like, well, if I'm paying $1,000 a month in rent, I want my mortgage to be $1,000. And from a comfort level, I completely understand that. Just because when you're used to paying one, that's about what you want to pay for another. However, when you are paying a mortgage, you're paying in like you're not only are you paying back this principal and interest for the money that you borrowed and the taxes and the insurance, but it's also an investment at the end of the day. The rent that you're paying every month, you're never going to get any of that back. when you have a home and a mortgage, you're paying towards an asset every month. So every single month when you make that mortgage payment, you're building up more and more and more equity. So we see some people and they get in and they're just super headstrong and they're very diligent about paying their mortgages, and paying anything extra towards their mortgage. I've had some people that pay a home off in 2 to 3 years, just because
Wow.
they're so diligent about it. And they'll live on one spouse's salary and put the whole other spouse's salary towards that. So you can't always really look at it as apples to apples when you're comparing a rent payment versus a mortgage payment, because there's an asset there when you've got that mortgage. So it's different. Maybe you're not putting a ton into your retirement account, but you are investing in this asset that for the most part is going to appreciate and it's going to go up over time. It's the number one way that generational wealth is built and passed down in America. So I'm a huge proponent of it, but there's also a little bit of mindset that goes into it, and understanding that just because you're paying $1,000 over here and maybe your mortgage payment's going to be 1,200, at the end of the day, even if it is a little bit more than what you're used to, you're going to recoup that, in the end, versus getting nothing back for the rent that you pay.
Yeah, and on top of that, one thing I talked about before you came on is that mortgage rates don't change. So once you sign the dotted line, that's going to be the rate for the entire length of the loan.
Right.
So it is, and we all know rent can change at the drop of a dime, but that is
That's
another
right.
big pro is that once you sign that dotted line of this is my rate, that's you're locked in on that rate.
That's right.
Um,
And it's not going to change. The only parts of your payment that can change, unless you have an adjustable rate mortgage, which is not very common, the only parts of your payment that can change are the taxes and insurance. They usually will change just a little bit from year to year. If you have mortgage insurance, typically that can go away with a lot of mortgage programs. And then the other good thing is that once you do sign a mortgage, you can always refinance it in the future. So that's something that we're starting to see a lot of. Rates were super low for several years, and then they spiked up. They got a whole lot higher, and now we're finally starting to see them come down. So when people are able to save money on their interest rate by refinancing, we always do a really deep analysis to make sure it's going to make sense for them. But just because this is where you start doesn't always mean necessarily that that's where you're going to finish, because you can refinance your loan. You can always take out, as you build up equity, you might want to add on a bedroom or do some upgrades. And there's home equity loans that you can take out, or you can do cash out refinances to, make upgrades to your property that are going to, make it worth more in the end. So you're not always stuck with that one rate forever, but unless you refinance it or pay it off, or it's an adjustable rate, yeah, the payment's not going to change on you other than just the slight increases for taxes and insurance. So
yeah, and what I was going to say also is you have um, a lot of free resources on your website, and we'll give everybody the web address at the end, which I thought was really cool. You have a lot of things that, especially young people, if they want to learn about some of these topics, you have a lot of ways to look at it on your website, mslending.net, and we'll give that again before we get done. Now, before I get to their questions, and I've got some really good ones,
yeah,
I do want to briefly talk about, you being an entrepreneur. I have, if I've lost count of the amount of kids that said they wanted to be an entrepreneur because I want to be my own boss. And I'm like, that's great, but they don't look, they see the glamorous side of it and they see the social media side of it, but it's not just let's flip a switch and start making money. Now,
it
obviously,
is
it has its
not.
pros. You were able to go to Nashville, and that's where you are now. And you're going out of town for a wedding this weekend, and
That's
you didn't
right.
have to ask anybody to go. You went ahead and made plans, but
Yeah.
it stretches you pretty thin. So just talk about, as an entrepreneur, the things that maybe people don't see, especially on the financial and the away from the public eye side.
Yeah, I mean, I think one of the biggest things with being an entrepreneur is that you've got to be self-driven. There's nobody that's, other than Uncle Sam trying to come and collect for their taxes, there's nobody that tells you to get up and go to work every day, or that tells you, hey, you need to do this or you need to do that. There's tons of books and all sorts of things that'll try to give you advice on how to set up a company and the things that you should do. But you've really got to be a self-starter. And it's got to be, at the end of the day, it's got to be more than just because you want to make money. You've got to enjoy what you do. I love the fact that I have so much freedom and I'm able to, attend my kids' sporting events, and I'm able to like go to school functions when I want to be there. We're able to, come to Nashville yesterday, and I'm going to be able to attend a wedding for a friend of mine this weekend. But I have my laptop with me. I'm pretty much always on call, and I'll still probably put in 50 to 60 hours of work this week. And
Wow.
that's just, that's one of the joys, I guess, of being an entrepreneur is that we do have a lot of freedom. However, we have to still do a lot of work too. It's not just as easy as, making your own hours and sleeping late if you want to and taking vacations whenever you want. There's, like I said, there's nobody that's coming to push you up and make you get out of bed and go to work every day and holding you accountable to being there and all of that. So you've really got to be self-driven, but there's just unlimited opportunities and different areas that you can get into if you do want to do something like that. I highly encourage it. I have a lot of people that we work with, and even though they may have a regular 8 to 5 job, but then they've got side businesses and stuff, so that they can still tap into that entrepreneurial spirit, but still have, a different job that they can rely on for the primary source of their income. So, but being an entrepreneur is fun. There's really
Yeah.
nothing like being able to have your own company and kind of like set roots, especially for us and, the community that I grew up in. It's been really, it's been amazing. So,
Love it. Now, I do have some questions, and these are really good.
yeah.
And this first one, she wrote on the card, please ask all these because I really want to know.
Okay.
But this is Jasmine McBride. She's in 10th grade. She wants to go to Georgia State University in Atlanta. But
Awesome.
she really wants to own her own home and wants to get into real estate. And
Yeah.
the first one she asked, uh, you mentioned on the mortgage that it can include the homeowner's insurance. But are there any other things that can be included in the mortgage? Because obviously the utilities that had to be paid as well.
Yeah. So any utilities, water, electricity, cable, like if you're renting and you have an apartment, that may be included. None of that's going to be included in your mortgage. So just like I mentioned before, you're going to have your principal and interest, homeowners insurance, taxes, mortgage insurance. Those typically are the only 5 things that would be included. If you're in a flood zone, there may be flood insurance, but everything else is going to be your responsibility on your own. Even down to like the homeowners dues, you're not gonna have that as a part of your monthly payment. It's going to be factored in when they're trying to figure out what your monthly payment would be. They do factor that in, but it's something that you still have to pay on your own. And if you don't pay it, they can put a lien against your property and all of that. But no, utilities, electricity, cable, none of that is ever included in your actual mortgage. Maybe in your rent, but not mortgage.
Uh, I, I like this one. She asked, "What is the minimum credit score that someone could have to get approved for a mortgage?"
So just like I mentioned before too, so we actually don't have a minimum credit score at this point. You can actually purchase a home without having a true credit score, as long as you have no credit. And what they do in that case is they use alternate ways of verifying that you can pay your bills back on time. So they're going to go and look at if you have rented an apartment and it didn't report to credit, you can get 12 months of history for that. You can get, if you had a gym membership, if you paid car insurance, just different things that may not report to your credit. And you can build what's called a non-traditional credit report. Now, that we don't see a whole lot of that anymore because most people do have something that's reporting out there. So for the people that do have something, just depending on the loan program that you're doing, I mean, we've got some that start like in the 550s. A VA loan has no minimum credit score. They're just looking at certain parameters to exist, within the credit report. But typically, you're going to want to have at least around a 600 or higher. The higher your credit score, the better your interest rate's going to be, the lower your payment is. So I always tell everybody shoot for 800, but as long as you've got around a 600, we can probably help you.
And then she asked if I had an apartment to start out, would that help my credit in order to be approved for a mortgage?
So yes. So like I said, some apartment buildings will actually report to your credit every month, which is great. Just because it helps you build up that credit. Some do not. And there's programs that you can use these days and request for them to report it to your credit so that it does help you build up some credit history. But then also we've got like one program with FHA, and as long as we can document that you've had 12 months of rent payment and that you've paid them on time, it makes it a stronger file. So the likelihood of your file getting approved is going to be better than if somebody that had not rented and didn't have that positive rental history in the past. So yes, it definitely can always help, but again, always make sure it gets paid on time.
I like this one, and she's got two questions. This is Zakiria Chambers. She's in 10th grade who wants to get into real estate.
Awesome.
She's always asking me how she can get a real estate license, but she asked this: if I wanted to be a mortgage lender, what would be the process?
So with being a mortgage lender, the basically you have to take there's a big licensing test. You have to take lots of education and hours. You have to sit for this test and take it. And you don't have to actually go to college to do what I do.
That's true.
Typically, they're going to want to see that you have at least 2 years of history in the financial industry in some capacity. So some people will not want to get started directly in mortgage and they'll go work for a bank for 2 years and then they'll decide to get into the mortgage side of things. But if you do plan to go to college and you wanted to go that path, I definitely always, recommend something finance related just because it's going to help when you do go to take those licensing tests. But that's what you have to do. It's about a 20-hour course or so that you have to take and then a really difficult test
Yeah,
that
and then
has to be
and
passed.
even associates at homes
Mhm.
and finance would be very useful. So even if you don't want to do the
100%.
4 year
Yep.
route, just do the JUCO route. But she also
Yep.
asked this, and she asked, if, when I'm looking for a mortgage lender, what would be the best questions to ask them about getting the best mortgage?
So one thing that's really important is so one of the things about our company, we're a mortgage broker, and there are mortgage brokers, there are mortgage bankers, but for our company, we work with probably 20 to 30 different companies. We've got about 100 different companies that we can work with. So we can shop your interest rates for you to make sure that you are getting the best rates. We work with a bunch of different companies just because everybody's programs are really similar, but this lender over here may have a really great down payment assistance program that this lender, lender B does not have over here. So that's one of the big things to ask is, being able to compare fees between lenders, interest rates between lenders, and then just ask if they are subject to just one set of rules. So, like if they have FHA loans and do they have just one specific set of guidelines or do they work with multiple lenders? Just because every lender can have what we call overlays, which are just different little kind of in house rules. And so that's, when you're shopping, that's a really big thing to know is that they're going to be able to give you competitive rates and fees, but then also, it's just about somebody that you trust and that you enjoy working with, that is going to take care of you. It's a process. Sometimes it's
Yeah.
only 2 to 3 months. Sometimes it can be a couple of years, but you want it to be somebody that you like, somebody that's dependable and reliable, because you're going to be spending a lot of time with them and getting to know them really well. So,
A big time. All right, I got time for one more. This is Azaya Ray. She's in 11th grade. She's in our band. She is our one of our big time in our JROTC. She wants to own her own
awesome.
practice as a mental health therapist.
I
So
love
obviously
that.
she's very interested in entrepreneurship, and she asked, "What are the biggest pros and cons of being an entrepreneur?"
Honestly, just like I said before, I think that one of the biggest things is when you get started, yeah, there's books that tell you kind of what to do, but there's no just handbook that says step one, do this, step, B, do that. It's always great to have networks around you of people that are doing the same thing that you are that can help mentor you. I certainly wouldn't be where I am today if I didn't have other friends that owned their own companies and could kind of help me when I got started. A big thing with being an entrepreneur is always saving and being ready for taxes because it's really easy to get paid and you think, oh, I had a great, big payday, but it's not all yours at the end of the day. There's always a
You
lot
don't
of
get
bills.
refunds as an entrepreneur.
That's right. But it's so rewarding and it's definitely so worth it. But I think, finding really good mentors is something that's invaluable anytime you're going to be an entrepreneur, no matter what the business is. And then just keeping that self-drive, like I said, nobody's coming to wake you up and push you out the door to go to work every day. So you got to want it. And nobody's going to ever want it for you more than you want it for yourself. And nobody's ever going to believe in you more than you're going to believe in yourself. So if your dreams are to the sky and you know that you're self-driven, entrepreneurship can be a really great path for you. Otherwise, you might need somebody, come on, got to get here by 8 and leave by 5.
Yeah,
And that's okay. There's people that, have great
and the
careers,
tangible
super happy that way.
rewards. The tangible rewards has got to be such a great pro to really be able to look and say, this is what I built.
Yes.
So that
Yep.
is always to me would be a huge drive to be an entrepreneur. And I know
Yep.
whenever she gets into it, she's going to do a great job. Now we're almost out of time, and as always, we just thank you so much for joining us, especially when you're having to
Yeah.
play mommy duty there in Nashville. And it's hard to believe that it's been 30 years since we've known each other,
I
25 years since
know.
we've But it's like we said, I wish we'd have had more people talk about this with us. And
Yep.
people, kids may think this is dumb, this is boring, I'm never going to have to deal with this. But this is knowing these small things, even just knowing the basics and knowing who to find to help you is what's going to make
Yep.
the difference between could be years, like you said, could be years of headaches having to deal with this just to live your dream. So
Yep.
as these kids start matriculating through high school, start making decisions for after high school, and they say all the time, "This is the house I want." Well, what can they do now to start making that process easier for them when they graduate?
Honestly, saving a little bit of money. Whether it is, there's a lot of programs where you don't have to have huge down payments, where you can get closing costs covered and things like that. People are buying homes with, not a whole lot of money out of pocket, but the more money that you're able to put away and save, the better you're going to be, or better off you're going to be in the end. Just because one, there's unexpected expenses that come up all the time. Plus, if you've got money saved up for down payments, you're going to have better interest rates, lower mortgage payments. But just start chipping away. It may not seem like a whole lot, but if you can, put $50 here, $100 there, even when you're young and working, at this point in your life, you don't have a whole lot of bills yet. So don't stack yourself up with too many of them, and just try to save as much as you can. And just, don't outspend what you make, I guess. Live within your means. That's going to be, super important stuff for when you're getting started. And don't forget to keep up with that credit report and make sure that everything's being reported correctly, and keeping an eye on that. That's always super important too.
Yeah. And mslending.net, I almost forgot to plug it again. mslending.net is your website. Your information is on there if anybody wants
Yep.
to start the mortgage process. And you've got free tools on there. I
We
know
do.
this is a business, but you're all about educating people about the
Yep.
process. So if anybody's interested on, because they were asking me some questions, so I was like, man, you're gonna have to ask her. I don't know. So you have a lot of things that explain some basic things on there. You have cost calculators, you have 15, 30-year mortgages, you explain the difference, why people need to know what it is, how it works. So a lot of great education on there. So I encourage anybody that's interested in, I want to own a home one day, go to mslending.net. You'll see, you've got a great picture of you on there, your contact info. But if you go to your free tools, you've got a lot of great things on there.
Yep. Yeah, we'd love to have you. And we're always, like I said, it's never too early to get started. Any questions that you have, we'll always take the time to get them answered for you, and would love to help however we can.
Love it. Now, the last thing before we go, we got to have you on campus in the spring to talk to our seniors. I think that'd be great.
I would love to do that. Love, love, love to.
I know
Yep.
you've been up here before. We got to get you up here again, but
Let's
I'll
do
let you get
it.
back to and you have a great time at the wedding this weekend. It's always a
Thank you,
pleasure. My
Greg.
high school classmate, owner of mslending.net, Michelle Dugan. Thank you so much for joining us today.
So great to see you, Greg. Thanks for having me again.
All right, see you soon.
Bye.